This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming to you after a midweek holiday, Wednesday morning today. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel. Well, after that big sell-off that we saw on Monday, hopefully there'll be a bit of a bounce today, considering that global cues are not too bad. But let's see which way it goes, because Monday was quite a grave picture for the bulls.
Well, it was a shakeout, so we need to see whether or not it was a shakeout for a day, or are we in for more pain, particularly from the broader markets. But a so-called wake-up call, I think, for the Indian equities.
Well, the alarm went out pretty loud, right? And it just rang out. Let's quickly start with what you need to know as we kick off another session. And I'll start with, we know where we left off on Monday, right? I mean, it was down and out, it was complete bloodbath. I'll get to that in just a bit, but start with something positive. Now, US data has come in better than expectations. I'm talking about the US PMI numbers, both manufacturing and services. And that's important. I'll tell you why. Both the numbers, by the way, surpassed 50. Actually, 51 for the services number, the manufacturing at about 50. For consensus expectations were that these would be below 50, both the manufacturing and the services number. And what does this kind of reinforce? It kind of, if you just contrast this US PMI numbers as against the European PMI numbers we've gotten across countries over the last couple of days, it tells you the theme of US exceptionalism, right? I mean, the fact that the US is, doing better than most other parts of the world on the developed side, perhaps that stays very, very strong once again. We've got to deal with 2 days worth of data. So, begin with the US 10-year. The US 10-year yield, which on Monday during sort of Asian hours while we were trading, it hit 5%. It's now back to 4.82. These are wild movements on the bond market that we're seeing. So last week, not this week, but the last week, Friday to Friday, the bond yields had gone up 30 basis points. The big week before that, yields had fallen 18 basis points. And, in 2 days, we've lost about almost 20 basis points here on the 10-year yield. It is just profit-taking, or perhaps, there is more here on the way down for yields and higher for bond prices. People like Bill Ackman, etc., who've publicly said that they've covered their bond shorts, do believe the latter, not the former. But we'll see. I mean, that is one individual, large investor, influential investor, but we'll have to see. Equities, last 2 days change is positive. The S&P is up about 0.5%. The Nasdaq is up a little better. It's up about 1.2% or so. That's the 2-day change. The dollar index is back at about 106.24. It was around the 105 levels when we kind of left off on Monday. We've come up a little bit. Now, come to the market here, which I think is the real deal. The point is, all of this doesn't really change the narrative one way or the other, shift things meaningfully for the Indian market. I'm talking about the global cues. They are a little bit here, a little bit there, but nothing very decisive that you can take away one way or the other. We saw meaningful selling in broader markets. We got the mid-cap index, which lost 3%. The small-cap index was down almost 4% or so. It's quite incredible that on the small-cap index, the low that we made on Monday was the same. I mean, it was pretty much the similar low as compared to the 12th of September, when we had a 4% fall as well. So we're basically back at those levels. Mid-cap index is a little different. I would say that just looking at purely very simple things like the relative strength index, etc., not so much for the broader market, but for the Nifty, which also lost about 1.5% or so, markets are quite oversold. So a bounce is due, but I would say that this is going to be more tactical, and you'd be better off just waiting this one out. I mean, I think before I came in, I looked at the GIFT Nifty that was indicating a 40-50 point higher start, but we'll see. But a bounce is due, a tactical bounce is due, because markets are oversold. Supports for the Nifty come in at about 19,200, which is the August lows. We're very close. I mean, 80 points away for the Nifty on the lows there, 19,200 or so. Below that, the next big support area comes all the way down to about 18,500. And, many like Lawrence Belanco, etc., who joined us on Monday morning are saying that perhaps, we'll see a break at that 19,000 level as well, and perhaps a little overstretched. So we'll see. That is basically, where the Nifty consolidated in the month of June. Resistance, very simply, is the 200-day, which is now at about 19,630. The Bank Nifty closed almost at the 200-day moving average on Monday, which is 43,194. We left off at 43,151. So will that come into play? But I think on the lower side, which I think is going to be more relevant, the next support comes in only at about 42,300 or so, and we can go into details here. Again, 4-5% or so from here on the Nifty Bank till the time that you hit another big support level. But I think, after that big crack on the 12th of September, the market kind of held on. It didn't, especially the broader markets, although many like Lawrence, etc., were saying that, this is significant and the markets will pay attention and we will drop off. It did not happen. And we've gotten hit again, once again. And of course, going into things like the end of the year, which is not bad historically for markets around the world, but also the local election cycle, etc. I think, it'll be headline heavy in that sense. So, expect a bounce, but as I said, a tactical bounce, which more likely than not, which at some point will get sold into. It's not a big bounce, by the way, just a 40-odd point start for an index at 19,300. It's, I would say, very, very marginal right now. So, yeah.
Absolutely. I think the writing is on the wall, right? This is a sell-on rally market, as has been the case for the last few days. Whether you call it global challenges, whether you call it some redemptions from our own markets as well, this is definitely a sell-on rally market. So today you have positive cues, decent cues coming in. The Dow was up about 200 points overnight. There were some strong cues that you had in terms of earnings as well. Microsoft reported their numbers, which was better than what the street was estimating. Although on the flip side, Alphabet was down about 6% after its cloud business missed street estimates. So some hits, some misses on Wall Street in terms of earnings action. But for our own markets, we couldn't even hang on to that 19,300 mark. We're sitting at a 2-month low, and there was some heavy selling pressure that we saw on Monday. The BSE companies together, the market cap was erased by nearly 8 lakh crores on Monday itself. So, that sell-on rally is something that can continue. There is definitely a lot of caution on the street. However, there was buying action. So DI has bought quite a bit, over 1,100 crores in the cash markets. FIs as well bought about 250 odd crores. Now, a couple of things to watch out for. Today, post-market hours, you have two heavyweights coming out with numbers. There's Axis Bank, there's Tech Mahindra. There's also Jubilant Foods that comes out with numbers through the course of the day. Tomorrow you have a couple of other numbers like Asian Paints, and then on Friday is the big day. There's Maruti, there's Reliance Industries. So all eyes will be on that. But by the way, there's that Eminem song, "Look Who's Back," back again. Look who's back, Bitcoin in a big way, right?
Big jump is what we saw.
Big jump, 7% higher on Bitcoin overnight. And I think it's now at $35,000 yet again, the first time since 2022. So gold has come back, Bitcoin has come back, and risky assets under a bit of pressure. I guess that's where we are at.
Well, that's right. For the Indian markets, the Nifty has been on a 4-session losing streak. And in 4 sessions, we've lost around 530 points odd. So I just want to put on board first a couple of positives. One is that the US yield, that's cooled off a little bit. It's cooled off to around 4.82%. The other factor is Brent crude prices. It was hovering around $94 per barrel. 10 sessions or so ago, it was more than $96 per barrel. Now, that's cooled down to around $88. From an India perspective, that's positive. So those are two positive global cues that have come on board. Now, what's the reason for Monday's fall? One is institutional activity was relatively low. So it appears there were more large HNIs or, domestic market players that did sell, and the institutional participation was relatively lower. The second factor is if you pull up the intraday chart, and you pull up the Nifty as well as the Nifty Financial Services Index, in the last 60 minutes, that's when the Nifty Financial Services Index did take a sharp drop. And that perfectly coincides with Nifty's fall. So part of the fall was the Nifty Financial Services, which has an overlap with the Nifty Bank. So that as well did come in for some sell building. Can the Nifty Financial Services Index unwind some of what we saw because it was weekly expiry? Well, that'll be one of the triggers to track today. For starters, we're likely to open up with a gain of around 40 points odd. Building onto those gains are going to be very, very important. So what are the key factors that you need to track for today? One is the IT index good support. The US bond yields have cooled off. The Nasdaq has seen a good run in the last 2 sessions that we were closed. For the 2 sessions that we didn't react to. So the IT index good support. The Nifty Bank, that plays out its weekly expiry today, and it's hovering around the 200 DMA. So you wanted to get a little above that and try to trend a little bit higher because it's at a crucial technical support zone. And the broader markets, well, that's going to be very, very important because that was under immense pressure. The advanced decline ratio tells you the picture. In the last 10 months, we haven't had a day when you saw just one stock that was advancing for more than 10 stocks that were declining. So if you weren't careful till now, well, you'll want to be very, very careful with regard to what you're buying. And, you could also look out for good quality names from the broader markets that will do well. But you need to be far more selective now in comparison to what you were doing, say, a month or so ago. The technical indicators as well should come up for you on the screen. The FI net short positions have gone to around 90,000. We have seen in the past when it goes to around 100,000 odd, we do get a bit of a bounce. The second factor is the Nifty PCR ratio. That's come down to around 0.7. When it goes to around 0.65, 0.7, those two technical indicators are going to be important because at times they do play out. When it gets stretched on either side, that's when we see a bit of a bounce. So that's something that we'll track. Let's get to the levels then. On the Nifty, support comes in at the swing low. That's the low that we saw in August, 19,230. Important support zone. The resistance comes in at around 19,400 because you have the 100 DMA out there. And the 19,400 call was seeing writing. The premium there is around 40 rupees. So 19,400, 19,450. The bears believe that they've got this covered. The Nifty Bank, as I said earlier, the 200 DMA becomes extremely crucial. We are hovering around that mark. So the GIFT Nifty starts off in the green. You'll want to build on from there. Want the Nifty to go towards the 19,400, 19,450. And given the current positioning, we could be in for a bit of a bounce from those levels. But the Nifty Bank holds key yet again.
Oh, absolutely. The Nifty Bank holds key. If you look at the last 5 trading sessions, right, the Nifty has lost 540 points. And at the same time, you've seen risk-free assets, so like something like a gold is sitting at almost record highs, almost back at $2,000 an ounce. So that's where we're at the moment. But let's kickstart the show without wasting any time and tell you what's lined up in the first half hour. We'll get you updates from the markets across the globe. Harold Vanderlind of HSBC will join in to discuss the global trade setup. Later, our research team will bring you CNBC TV 18's top 10 stocks for the day. At 8:30, we'll do a fundamental stock analysis with Devin Choksi of DR Choksi FinServe, and lots more coming up through the course of the day. But on the equities front, first up, we have Amit Sachdeva of HSBC, who says that Indian equities are under pressure as FIIs have turned net sellers due to a sharp jump in US bond yields. He says their analysis of 21 similar episodes since 2001 suggests an impact on FII flows is short-lived. He says the geopolitical risk is the key unknown, but if contained, FII flows could rebound as growth stands out and valuations are attractive.
Okay, well, let's get you some money market views now. This is Kunal Sudani of Shinhan Bank, who says that the US PMI exceeded expectations and highlighted the divergence between the US economy and others, indicating that the fundamentals still favor the US economy. Bond yields cooled off, but the escalating geopolitical tensions between Israel and Hamas needs to be watched closely. For the USD INR, he says 82.9 to a dollar acts as a support, while 83.2 to a dollar is a resistance.
All right, and on the bonds now, Neeraj Gambhir of Axis Bank says bond yields have remained elevated as market has been concerned about the size and timing of the open market operations by the RBI. He says the US 10-year yield reaching 5%, a level not seen since 2007. Ongoing conflicts in West Asia and higher crude oil prices have been other crucial factors affecting market sentiment. He says as the higher for longer narrative continues to take hold globally, he expects the 10-year benchmark bond yield to trade in a range of 7.3 to 7.40% in the near term.
Well, we've got a lot of stock-specific action to track for you. Get to that in just a bit in our special Top 10 segment. But for the time being, let's run you through the list. We're looking at Torrent Pharma, BNB Housing, Delta Corp, Kaya, KRBL, L&T Foods. You have Keval Kiran. They are all stocks on the positive news flow. While on the flip side, you have Vedanta, SBI Cards, and Mahindra Logistics that will be reacting to negative news flow.
Okay, well, that's what's lined up here as we go forward.